Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our Monday buys video. So every Monday I release a video going over what stocks I am buying this following week here on Monday. I add brand new equity into the M1 Finance Roth IRA. This allows me to dollar cost average on stocks that I'm currently either in the negative on, stocks that I want to just buy because they're at better valuations than they were sometime here recently. I'm getting a better opportunity. I also increased my income for 2019 and beyond as these dividend stocks continue to raise and pay out their dividends. And it just allows me to continue to buy and grow my portfolio larger. So that is what we're going to be doing in today's video. If you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I do make content going over stocks, dividends, real estate, entrepreneurship, and personal finance. So if you're interested in any of those topics, definitely subscribe to the channel. If you do enjoy the video, find it helpful, hit that thumbs up. I appreciate all those thumbs up. And if you have any sort of comments, questions, going over anything in today's video, stock market, etc., drop it in the comment section. I always read and reply to all your guys' comments. And let's go ahead and get into it. So every week, the very first thing here that I want to do by adding more cash into the portfolio is being able to reinvest cash that's currently sitting in the portfolio from dividends in the prior week. Well, last week we had quite a bit of dividends actually get paid out. So due to the dividends that were paid out last week, so early in the week we actually had Lockheed Martin paying out $4.57. This is one that I had not been tracking the payout. It paid out on Monday, was sitting in cash after my Monday week last week of these stocks here that I bought last Monday, plus my 115. I only purchased $119.86 when I had actually $124.43. So I had $4.57 sitting in cash. And then throughout last week, I had a few stocks coming in, paying out dividends. Kimberly-Clark, $4.91, Walmart, $3.43, and Coca-Cola, 43 cents. So here we had $8.77 in dividends paid out, and we also had that Lockheed Martin payout, which totaled $13.34. Well, M1 Finance went out there and said, hey, based on your current equity percentages to your target percentages, it automatically invested into Medtronic and Walgreens. So these were stocks that I already wanted to be invested in. Guess what happened last week? If we look over at finviz.com, I pulled this up on my weekly recaps. If you guys have seen this in my weekly recaps, if I head over to finviz.com, click over here and take a look at the 1 week performance, we'll see here that Medtronic dropped 2.36% last week. And if we look over in the, where is it? I'm not sure where Walgreens would fall. It should be over in this area here. But Walgreens fell last week down 13% in the portfolio. If I look at the live data here, I can see here that Walgreens here is down about 12% since I started buying into the stock. But it's such a very small amount here. I own about, my cost basis is $23.57. So being down 12% on $23, that allows me to definitely bump up my yield on cost here. I'm sitting at a yield on cost of 2.85 when it's currently offering a 3.22% starting yield, an annual payout of $1.76, a very low payout ratio of 29.4, and a very strong, continued growth there as far as having grown and paid out dividends for 43 years. If we take a look here, that prior, let's see, when did it start paying out those dividends? Back in 1976 is when Walgreens started to continuously pay out dividends year after year after year. Here you can see back in 1995, they did a 2-for-1, basically doubling your dividends. They did another 2-for-1 in 97, another 2-for-1 in 99, and then have continued to raise and pay out dividends, now paying out 44 cents every quarter per share that you own within your portfolio. So pretty good looking company. And so here we had $13.34. Go out there and buy Medtronic and Walgreens, both which were hit last week. Now, due to this sort of hit here in the portfolio, let's take a look at the 1 week performance. We can see here Walgreens down about 11.82%. My main focus this week is I want to take advantage of this current dip here in Walgreens. I've been going back over my 4 options that I have been wanting to sort of do. 1, use my wife's affiliate referral to start up my own M1 Finance Roth IRA over here on M1 Finance, drop cash into it, and buy into Walgreens. To just do a large amount into her own Roth IRA, buy up Walgreens up into that $500–600 range, similar to where these other positions are at. 3, just continue with my plan. My plan was set in motion, adding $115.38 every week, and just kind of continue to go about that plan. Or 4, just do nothing with it. But, I actually ended up going with my 3 plan, which is my normal plan. I'm not going to go out of my way to dump a whole lot of cash into the portfolio. I want to stick to my investment plan that I started back in 2019. I don't want to go overboard right now, so I'm going to continue to stick to my plan. Walgreens, I'm going to be able to buy more shares this week, so I'm going to be putting in the full amount into Walgreens here, which I believe is offering a really good deal in my opinion, plus just current valuation here that's out there. If we take a look at current prices for Walgreens over the past 10 years here, as of 2008, 2009 until current period, we can see here, let's just go ahead and add the percent change in here, that Walgreens has increased at this current point 103.1% positive. That's an average return of 10.3%, staying right on line with the average for the S&P 500, 7 to 10%. Plus, Walgreens is now offering a 3.22% yield. So this increase here in price does not price in their average payout of 2 to 3% per year. So here, actually 13 by 10, that's 133% on average. So you'd be sitting more up in here if you continue to reinvest those dividends. That allows it to continuously compound as well year over year. So you may actually end up sitting higher, more into that 150% return over the past 10 years, not just by growing in equity from the share price, but also by getting paid back more cash, buying back more shares, and continuously doing that over time. So if we compare here to the price and the available yield over the past 10 years, let's take away that percentage down here, percent. Now we're just looking at straight numbers here. So we're getting offered not a 3.15% rate, but a 3.22% rate. Now taking a look here at Walgreens, its current price, its current dividend payout, when is the last time that Walgreens has offered a buying opportunity with a starting yield of over 3%? So back here in these rough times, 2013 was a pretty rough time out there in the market. That is when the stock market, the real estate market, that's when it really started to turn back around. So back in 2012, 2013 period, Walgreens is trading at a valuation and price that it offered a nearly 3% starting yield. Well, we're getting that opportunity. Well, I'm getting the opportunity once again here where it has dropped both below 200-day and 50-day moving averages, putting it at a starting yield of 3.22%. If we look at its financials, price started coming down here in 2015. It hit a high, and as of this point has fallen from a high of, say, $90, it looks like, maybe $95 in that range, to now $54.69. But has its financials how have its financials actually done in this same time frame? So if we look at the 10-year period here, we can see revenue as of 2015, revenue has been in a nice steady increase towards a positive. Now removing revenue from there so we can actually see these other stats here, we can see that net income and free cash flow have both moved in a positive direction from 2015. So their financials have been moving in a positive direction, but their price has not. So there's a little bit of a fluctuation. It's out of favor with investors, but the price, the financials behind it are still sound. So this is looking like a very good, just solid blue chip company with a straight valuation. And if we look at its price to book and price to sales here, they're both below 3 here with a price to book of 2.019 and a price to sales of 0.38. I would think more, Walgreens more as a price to sales driven company because it's sales based. They have a lot of stores everywhere. It's, they go through their renting through Realty Income, ticker symbol O. Walgreens rents a lot of their facilities and uses them. So kind of taking a look here at the return on invested capital. If we want to take a look here at that, 2015, they kind of slumped down, but the return on invested capital, you can see how this kind of played out apart. So maybe investors are a little bit worried that the return on invested capital back to their shareholders was kind of down in the dumps, but you can see recently as of 2018 and going forward that they have started to pick it back up quarter after quarter. This is trailing 12 months. If we take a look at their current assets and their liabilities, go ahead and punch those in. Current assets are sitting at 68.12 billion and current liabilities at 41.44 billion. So, liabilities less than assets, always a nice little trait. And that's about all I kind of want to share there. So Walgreens has been on my radar. I made a video kind of going over 5 stocks I've been wanting to buy and add into my portfolio back in December 2018. Let's see if it's actually in here. I may have removed them from my sort of tracking. So here's my 5 stocks that I've been wanting to kind of buy in. So the way I track this is I said that I've been wanting to just buy, an example, 1 share. As of my initial buy price, T. Rowe has increased $13.10. So my initial, I wanted to buy the stock. It's gone up $13 a share. Walgreens has gone down $13 a share. ADP has gone up $31 a share. VF Corp has gone up $18.60 a share, and Cisco has gone up $4.86 a share. So of my 5 stocks that I wanted to buy back in December, Walgreens is offering a discount of $13.36 per share, for a solid blue chip company here. It's offering me a much better starting yield than I initially wanted to buy the stock at a 2.58. Current starting yield 3.22. So that's basically it. It is one that's already in my portfolio. Quick disclaimer, I own all these stocks here listed in the specific spreadsheet, but it's now down 12% in my portfolio. By buying this stock, it's going to allow me to increase my yield on cost. I have a yield on cost currently of 2.85. It should bump it up nearly to 3%. It'll increase my annual income, increase my quarterly income, which pays out every February, May, August, and November. So very solid company there. In actual buy price, I'm only down $2.67. So yeah, that is pretty much all I wanted to cover. Now the next thing here that I wanted to do is buy the actual stock. So it is the only stock I'm going to be buying. Now when I look at my activity here, I believe I do have some dividends. Walmart and Coca-Cola, but these have been reinvested. Oh, they're pending. Coca-Cola. I was pretty sure that I had seen Coca-Cola here earlier. Yeah, Coca-Cola and Walmart. They've already been paid out, so it's a bit confusing here on M1. So here, the details here for April 3rd. This is showing Walmart and Coca-Cola. They're in the activity. They've already been used to buy up, but they're also showing up here in the dividend as pending. So that's a bit wonky there. So Coca-Cola and Walmart, those are, we're in April. So Coca-Cola and Walmart, we should be expecting Kimberly-Clark and WPC. So if I go over here and check out WPC, let's go ahead and pump that in, and Kimberly-Clark, KMB, and see anything else here. Maybe Cardinal Health. I'm not 100% there with Cardinal Health. CAH. I'm not sure if this one we get paid out. So if we take a look down here towards the bottom, we should get paid out on April 15th, which is Monday. So here, I should get paid out 47 cents, 0.4763 times the share count for Cardinal Health. So Cardinal Health should pay me out on Monday. So I should expect to kind of add that into my roll. Also, here, WPC is going to pay out $1.03 per share that I own of this specific stock here. So on Monday, I'll also get paid out this one, Kimberly-Clark here. I should also be expecting this time, this one here. Okay, so Kimberly-Clark was already paid out, so that one's a little bit off there as far as my tracking goes. Digital Realty Trust, but that's pretty good. So what I'm going to be doing here is taking a look at Cardinal Health. So the way I kind of do this is kind of wacky, but Cardinal Health, I go up here and I take a look. Okay, quarterly it's going to be paying me out $3.44, so $3.44. I also have WPC. WPC should be down within this range here. So WPC is going to be paying out $7.76. So $7.76. And I also have 1 cent sitting in cash, plus I'm going to be adding $115.38. So here total on Monday, I should be making a buy of $126.59. So 126.59 is how much cash I should actually expect to have in my account here on Monday to be able to invest. So what I'm going to do here is now head over to the portfolio tab, slide on down, find Walgreens. I'm going to be specifically just targeting this specific stock with this cash, going in for a buy, put it in the amount here that I'm going to be focusing on buying. It's going to show you here that I have 1 cent in cash balance. My buy orders is set for a minus, it's going to set me back $126.59. I go ahead and hit continue and confirm, and that is going to go. And now it's set. I have portfolio estimated that's going to go on here in 29 hours and 57 minutes. Now it is currently it's Sunday morning. It's 1 a.m. in the morning, so this is going to go another day here. Plus, Monday morning is when this is going to be taking place here. And that is basically it. So on Monday, I'm going to be posting my screenshot, my information of where I bought it, how many shares I bought, how much that actually increased my dividend income for 2019 and going forward. So if you don't follow me over on Facebook, definitely hop over to Facebook and check that out. So yeah, kind of interesting, kind of going through how I go through my portfolio. You don't have to do all this sort of information, research, but if you're looking for valuation and you're looking for stocks that are going to be offering a discount, this is the sort of method that I use. Keeping a spreadsheet, going through and doing a little bit of research. You can see here that we took about 15-16 minutes to kind of come up with a plan of stocks we've already bought and reinvest. We've already bought these, or I've already bought these, and it just makes it easy to kind of continuously buy back into shares, decreasing my unit cost, increasing my yield on cost, and increasing my overall dividend. So that is it for today's video. If you guys did enjoy the video, hit that thumbs up button below. If you have not subscribed to the channel, definitely subscribe to the channel. If you're a dividend investor, stock market investor, if you enjoy real estate, entrepreneurship, personal finance, hit that subscribe button. And if you have any comments, questions, drop it in the comment section. And that's it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.